Welcome to the Real Estate Guys radio program. I'm your host, Robert Helms. Where are you as a real estate investor? Are you just thinking about it, getting started, seasoned professional, ready to make a jump? Today we're going to talk about how you get to your next level as a real estate investor on the Real Estate Guys radio program.
Hey, this is Gene from the Residential Assisted Living Academy. Making money, cash flow is important. Doing it for the right reasons with a heart is even more important. If you'd like to learn more about turning a single-family home into a cash flow machine, earning $5,000, $10,000, $15,000 net or more per month, well, I'd like to share that with you. Our motto is do good and do well. There is a silver tsunami of seniors coming, and you have a huge opportunity. Take advantage of it.
To gain access to an informational webinar presented by certified financial planner and real estate entrepreneur Gene Garino, and discover how you can turn a nice home in a nice neighborhood into a cash flow machine, send an email to ALF, A-L-F, at realestateguysradio.com. That's A-L-F at realestateguysradio.com. Welcome to the Real Estate Guys radio show. I'm your host, Robert Helms, with me as usual, co-host, financial strategist Russell Gray.
Hey, Robert.
You know, the number one question that the real estate guys get to ask the guys is about getting started. How do I get started in real estate investing? And today's show is not precisely about that, but if you're just getting started, you're going to dig it. Today what we're going to talk about is kind of the natural evolution of a real estate investor. Not all investors are created equal. Not all investors start in the same place or end up in the same place. But I will tell you, after 20 years of being on the radio and meeting listeners all around the world, there is a natural progression. And we're not sure where you may be on that, but I think today you'll get some insights into how to position yourself for kind of that next level, whatever that looks like for you.
Yeah, I mean, I think that anybody listening to a show like this is probably at a place in life where they want to go to the next level, whatever that looks like for them. And a lot of people think it's about knowledge or information, and that's partly true. A big part of it is about transformation and actually changing, because if you remain who you've always been, you're going to do the things you've always done, and you're going to get the same results you've always gotten. And the older you are in life, kind of the harder it is to make that change. So we're all about environments. We're all about kind of laying out the path and trying to figure it out. I'm not a big believer in shortcuts, because I've learned in life every time I've tried to take a shortcut, it actually is longer. And I think sometimes if I can just learn the secret formula or learn that magic trick or meet the right person, all of a sudden everything can come together. But what I've learned in my old age and through observing many, many people at various stages of their development is it starts with you and a personal transformation in the way you think, and what you believe, and then pretty soon that starts to manifest in the decisions you make and the results you produce.
Yeah, absolutely. It really is who you are before it is what you do and what you have. Now, having said that, totally agree about the timeline. It's the tortoise and the hare, right? The rabbit just runs and goes and is fast and naps and flips out. And meanwhile, there's the little tortoise or turtle just plugging away, slow and steady wins the race. And real estate is a long-term game. Now, having said that, it doesn't mean you can't speed up the process, and we call that collapsing time frames. If we can take something that took us 10 years to learn and show you how to do it in 2, well, that's just collapsed time frames and saved you time. So we don't want to shortcut the process, but we also don't want to belabor the process. So with that kind of tee up, let's talk about the various kind of stages there are. And really the first is when you're not sure you want to be a real estate investor. This is when you're exploring real estate as a possibility for you. And frankly, most people do it part-time. And they are thinking, well, I want to have more in the future, and I like the idea of real estate owning property that somebody else pays for, and I get the cash flow and I get the upside. But there's all the things you got to learn, tenant landlord and finding a team and what market makes sense. But the first part, and an important part, is just exploring whether or not real estate makes sense for you.
Yeah, there's a lot of accidental millionaires out there in real estate, because real estate is relatively easy if you keep it simple. And you'll become wealthy over time if you just accumulate properties and pay attention to little details like cash flow. The thing is, you can compress a lot of time frames along the way, and it's not shortcutting things, but it's just the distance between the next plateau or the next level. And part of that is getting a vision. So when you start contemplating the possibilities, yes, you can just buy a property and then accidentally not be able to sell it and decide to rent it out because you have to, and then get another property. And then you say, hey, that first property is working out okay. Maybe I'll do that again. And next thing you know, you got 3 or 4 properties. And if you just hold on to those 3 or 4 or 5 properties, by the end of 30 years, you've done pretty well for yourself. Of course, if you were to actually put some strategy and some effort and some leverage and real focus into it, you can create a lot more wealth faster. And so how do you learn to do that? Well, part of it is you just start to get around other people that are doing it, and you realize, wow, I had no idea. I've just been doing houses because I lived in a house and then I sold a house, but there's other property types. There's different ways to approach it. Boy, there's other markets. I just happened to buy a property in the neighborhood where I was living, but never occurred to me I could invest out of state, much less out of country. And so a big part of the transformation process is just beginning to get a feel for what the possibilities are out there. And you do that by getting around other people that are playing the game at a higher level in a different way than maybe you're approaching it right now, whatever level that is.
And there is some education involved. I mean, there's great books on getting started in real estate, probably more real estate books on getting started than any other topic. And you'll learn things like, how do you approach financing property, and how does leverage work? And what about qualifying for loans? You need to understand that. Now, you can't get that all done in a book. You start there, then you talk to a mortgage professional, and they can look at your actual scenario, your credit, your cash, your job, and say, based on who you are, you would qualify for this much. That's all in exploring whether or not it's possible. And then what does it really take? Some people want to be hands-on. They want to roll up their sleeves and go paint the house and carpet it themselves and put up a new fence. And other people are like, nah, I don't want anything to do with that. I want to find a property that's ready to go with a tenant in it. We would call that turnkey. And for you, that may be what makes sense. So it's all part of something we call personal investment philosophy. You can probably search through our shows and find a show or two where we touch on that. But the basic concept is just every investor is different. And you want to set up real estate investing as something that supports who you are and your skill sets, and not the other way around. You don't have to become someone new to be a real estate investor. Look at your current abilities and your experience and your past and figure out, hey, are there things I'm good at? Are there things I like to do? Are there things I enjoy that will help you in being a real estate investor? Or do you just purely want to be a passive investor that just sits back and coupon clips, we call it, just taking passive cash flow? It's not right or wrong, but you do have to understand some of this. And I think the first part of exploring is just to really get your mind around what's involved in real estate investing. And are you suited for that activity?
Yeah, so that's part of the whole thing of developing personal investment philosophy. And you do that, again, by looking around at what other people are doing. You meet with professional advisors. You mentioned mortgage consultant. That's probably one of the most important people on your team, property managers in the markets that you're interested in, listening to shows like this, going out on field trips when you have the opportunity to do it, going to seminars, live meetups. Those are all part of it, getting around those people as much as you can. The other part of it is taking inventory of what you have to work with. We call them the 7 essential investor tools. So you've got your cash, you've got your cash flow, you've got your equity, if you have any equity, you've got your credit. You have the 3 intangibles, which are your time, your talent, and your relationships. And those 7 things, when you take inventory of what you have to work with, as a strategist, that's what I look at. What do I have to work with? Where do I want to go? And how do I use what I have to get what I need to get where I want to go? That's kind of the formula, if you will, for solving the problem. And the reason it's different for everybody is because everybody has a different starting point. Everybody has a different toolkit. Everybody has a different destination. And so there is no one size fits all. But if you work on developing yourself and developing your team and your knowledge, then over time, you will begin to learn how to use those 7 essentials more effectively, and you will learn how to reinforce and expand them. One of the great things about real estate investing is if you do it right, almost anything that you lack, you can go get by putting together deals with other people. And I'm sure we're going to end up there at some point. It's maybe not where everybody starts, but let's say, for example, young person starts out in life and they're like, I don't have any money. I don't even have a job. But you know what you do have? You've got a pristine credit score. If you haven't screwed it up yet, then don't. treat it like gold because it can make you a lot of money. And so as soon as you turn 18 years old and they start throwing those credit card offers at you, or they put that big college loan paper in front of you and you're going to sign your life away, think long and hard about the value of your credit score, because when you marry that to income, now you have lendability. You can borrow, and real estate is all about borrowing. You may not have a down payment. That's where you could bring in a strategic partner in something called equity sharing, maybe mom and dad or an aunt or an uncle or a friend, or somebody says, hey, I don't have good credit because I had a bad thing happen in my life, but I've got cash because I know how to make money. Great. Well, I don't have any down payment, but I got good credit score. I can go get a job. I got income. We'll let that season. And so you can begin to work things out. And that's the point. Nobody listening to this should feel like, oh, I can't because I don't have all the pieces. As long as you've got something, as long as you've got some time, as long as you have the ability to learn, if you have the ability to build relationships, those things are intangible, but they can bring you all the tangible things you need to actually execute on a deal.
So the 7 essential investor resources for financial. So that is cash, how much you have, cash flow, if you have it coming in from an investment or a job or whatever that might look like, your credit, that doesn't just mean your credit score, but that's part of it, your ability to borrow, and then whatever equity you have in something you already own. Those are the financial ones. But the other ones are the most important. That is, how much time do you have to give? If you're just getting started, that may be a big asset that you have that your potential partner or your passive investor doesn't have, is time. Talent's just what you're good at, and it doesn't mean it has to directly be in real estate. If you're good at project management or strategic thinking or just building relationships, those are great skills. And then probably number 1 in my book, relationships, who you know. This is a relationship business. So there's a lot of resources that you have. And this whole thing, everyone been talking about up till now, is really getting ready and getting your mind around it. And I know if you're thinking, well, I just want to go, and I want to go fast, this is slowing down to go faster. The biggest mistakes we see people make is when they take action without strategy, action without thought, action without really giving it the time necessary. So if you'll invest a little time up front, focusing on the things we've been talking about, you can set yourself up to win. So once you've done that, that's kind of the first levels. Am I even interested in real estate investing? The next is to go buy a property. And that's exciting. Your first property is awesome. Even though the property itself might not be that fabulous, the whole idea that somebody else lives in a house that you own, they get up every day and go to work for somebody else. You don't have to manage them. You don't have to supervise them. They send you a big chunk of their rent, and that pays all of your costs and a little more beside. That's intoxicating. So most folks are going to start as part-time real estate investors. And there's some great logic in this, because as Russ talked about, for you to qualify for loans on property, which give us the leverage that magnifies the return, it really helps if you have dependable income. And the most dependable income a lender loves to see is a good job. So Robert Kiyosaki wrote a great book called Before You Quit Your Job. And a big premise of that was too many people decide they want to quit their job before they really should. So just think about that. You might be ready to go financially at some point and quit your job, but having a paycheck and having a great credit score can help you. And so a lot of folks will buy that property, and then they'll get it fixed up, and they'll get a tenant in there, and they'll get it managed. And then over time, they'll continue to save for another down payment and maybe buy another property in 2 or 3 years. And then maybe the next one they can buy in 1 or 2 years. And it's kind of that slow path to wealth. Nothing wrong with that. We just described the vast majority of real estate investors. They maybe own the house they live in, they maybe don't, but they have 1 or 2 or 3 properties that just produce income and hopefully over time go up in value.
So a couple of things you said there, Robert, that I just want to draw attention to. One is I have a little catchphrase that I learned a long time ago, which is direction is more important than speed. You talked about just, going before you're ready and feeling like you need to be moving, but not having a plan or a strategy, and then ending up, running into a brick wall. That happens all the time. So just always remember, direction is more important than speed. Set your course and then get moving. The other one is an old sales saying, which is when you're looking to do business with a customer, they need to be ready, willing, and able. And when you think about things like quitting your job or taking on a big obligation, maybe taking on a big risk, if you will, being ready to do it, being willing to do it are 2 things. But being able to do it is also very important. And so early on, when you don't have a lot to work with, Sometimes you have to put a disproportionate amount of the little bit that you have to work with at risk on a deal. The problem is if you bet the farm on anything, however big your farm happens to be, and it goes sideways for whatever reason, could be your fault, could be your inexperience, could be something completely out of your control that nobody could see coming. But if that happens to you and it takes you completely down to zero, it can take you a little while to crawl back, especially if the thing that gets damaged in all that is your credit score, because your credit score is the thing that opens up a lot of easy financing. It doesn't mean, you mentioned earlier, and I think it's another important point I want to draw out, is that credit doesn't just mean credit score. It means your credibility. You can borrow privately from people if they have faith in you, if they trust you, because that's really all a credit score is designed to do, is to tell a stranger how you handle money. But if you have something that went sideways that was kind of a one-off deal, and otherwise you're a very responsible person, somebody who knows you personally and saw what happened might say, hey, you know what? I kind of understand what happened. And even though your credit score is in the garbage, I can see that you're a responsible person. You know how to make money. So I'm willing to invest or lend to you. Then just remember, you're working on your reputation, which is more than just your credit score. So I just kind of wanted to hit those highlights real quick before we moved on to the next part.
We're talking about getting to your next level as a real estate investor. More when we come back. You're tuned to the Real Estate Guys radio program. I'm your host, Robert Helms.
Real estate investment advice right in your mailbox. Sign up for the free Real Estate Guys newsletter at realestateguysradio.com.
Are you achieving everything you want in life? What if there was a time-tested way for you to get everything you've dreamed of? The most successful people in life set goals and keep themselves accountable. But how? The good news is that it's not rocket science. You too can learn the skills and unleash the motivation that will create success in your life. And now is the time. Hi, this is Robert Helms, and I'd like to personally invite you to attend Create Your Future, the 2020 Goals Retreat, January 17th to 19th in beautiful Lake Las Vegas, Nevada. This unique weekend has been called phenomenal, inspirational, and life-changing by the thousands of people that have attended. Hear from some of them and find out more at realestateguysradio.com under events, or call 888-489-7723, extension 18. Get your life back on track, physically, spiritually, and financially. Attend the 2020 Goals Retreat on the third weekend of the new year. Click events at realestateguysradio.com to register. This is no dress rehearsal. Live the life you were meant to. Visit realestateguysradio.com or call 888-489-7723, extension 18 today.
Do you have a self-directed IRA invested in a syndication? Guess what? It's a ticking time bomb. Why? Because IRAs get hit with UBIT taxes, even Roth IRAs. Hi, I'm Damian Lupo, and we fix this problem for you forever. It gets even better because using the EQRP, you can literally get rid of taxes from all of your gains forever and protect your nest egg. The EQRP is the best vehicle to get it done. IRAs can't do it, not even Roth IRAs. You see, UBIT happens whenever any type of IRA invests in anything with debt. Don't worry, even if your IRA is already invested in a deal, we can kill that tax. Our team at Total Control Financial is here to give you control of your retirement money and free you from that deadly IRA tax forever. Want to learn more about the EQRP? Send an email to eqrp@realestateguysradio.com. I'll email you my special report and send you a copy of the QRP book. Paying a 37% UBIT tax is stupid. First step to getting rid of that tax is to send an email to eqrp@realestateguysradio.com today.
Hi, this is Lawrence Yun, Chief Economist with National Association of Realtors, and you are listening to the Real Estate Guys.
Welcome back to the Real Estate Guys radio show, now in our 22nd year of broadcasts. Thanks for tuning in today. We're talking about how you get to your next level as a real estate investor. And we started out by talking about folks who are just exploring whether real estate is right for them, and then the majority of real estate investors who just own a property or two or three part-time. It's not their full-time gig, and maybe they don't ever want it to be. But we're talking about getting to the next level. So I think once you've owned, say, single-family homes, and you don't have to start with that, right? You've heard Brad Sumrock on our show. He bought a 32-unit apartment building as his first investment. We know folks whose first investment was an agricultural property. Most people, though, are going to invest in a townhouse or a condominium or a single-family house or a duplex, something that's small, reasonable, understandable, bread and butter. And maybe you collect a few of those. I like to fancy myself a collector of real estate. I like to own real estate that goes up in value and creates positive cash flow. But one of the things that is kind of a natural evolution is for folks to then look for a second or a different asset class within real estate. And the most common is probably the greenhouse to the red hotel, right? You're investing in little single family houses and you think, wow, look at that 10-unit apartment building. There's some efficiencies in that 10-unit apartment building. There's some economies of scale. Maybe I want to get into multifamily. And then you realize, well, bigger means more economies of scale. How could I put together a deal for 20 units or 25 units? Or maybe you say, well, it's not residential property I want to focus on. In my marketplace, boy, office looks pretty good, or retail or industrial. So I think in many ways, the shift that happens after just I'm a part-time real estate investor is I'm starting to explore different types of real estate.
Yeah, one of the things that I spend a lot of time doing is looking at the financial landscape. And I make the argument, I've gotten in this debate many times with people, that real estate's not an asset class. It is made up of a lot of different niches, and they behave differently based on what's going on in the economy. And even within the same product type, there are different marketplaces, there are different neighborhoods, there's different ownership dynamics. There's so many things that make each and every property unique. With that said, there are times, because of different reasons, say, for example, residential assisted living. That's been a very hot topic, the broader concept of senior housing, and probably associated with that medical. Why? Because the baby boomer demographic is getting old, and they're at that season in life where they're going to be consuming a lot more medical care. And then at some point towards the end of the life, they're going to need help living independently until whatever time they end up either passing away or needing more than just assisted living, but they're going to need, a full-blown nursing home. So that's an example. You can also look at, say, for example, if the economy starts to get a little soft. When the economy gets soft, then that means that people don't have as much discretionary income. They don't have as much upward mobility, and it can tend to put downward pressure on more expensive marketplaces, more expensive product types, and put upward pressure, demand, if you will, as people move from above down to a lower place. So it could be maybe a different unit in an apartment building. They go from a 3 to a 2. It could be they move from one side of town to the other side of town. It could be they completely change cities and go from one part of the world or one state to another state in order to have a better opportunity. And so as you're watching all these different things happen, you can begin to be strategic about catching where you think the wave of immigration or demand and money is flowing. Interest rates is another one we pay attention to. Right now we happen to be in an environment where mortgage rates are at or right at all-time lows. And the result of that is every time they drop a little bit, there's a spike in home buying. Why? Because people see the opportunity to buy a home that they couldn't previously afford, and the sellers haven't figured it out to raise the price soon enough. And there's this little window of opportunity where a bunch of buyers run in and buy, they bid things up, and then it slows down a little bit. So there's this ebb and flow going on in the market. These are all things you learn over time as you just start paying attention. And the beautiful thing about when you start to realize this from a real estate perspective, an investing perspective, is that you can begin to design your investing around the things that interest you, the areas that interest you, places maybe you want to travel, different product types that you think are interesting more than just making money, but maybe you have a specific interest. I mean, we've been big fans of resort property investing for a long time for that reason. So that's a beautiful thing about real estate. As you continue to expand your education and build your network and understanding of what's possible, you begin to realize that you can capture opportunities that the rank and file investor, the beginning investor, is going to miss.
Well, this is the evolution part, and there's a couple things about being in more than one product type or market, and that is you're diversifying to some degree. Imagine all you ever invested in was mobile home parks. Mobile home parks have great cash-on-cash return. Mobile home parks make a lot of sense because the tenants treat the property a little better because often they own the physical trailers and pay their space rent. But imagine that a time comes where mobile homes completely fall out of favor for whatever reason, and that's happened several times over the last 50 years. If all you do is mobile homes, then you're done, for at least temporarily, when that takes a time out. Happens in every real estate class. So by being in more than one, It also lets you diversify. It also lets you build what we call your experience resume. You're not just viewing real estate as a house that a tenant lives in. And a big part of the mindset around that is just if you do the homework, and most of you probably know this, but if you're new to investing or new to the show, you're going to go find a single family home in some great tenant demand, landlord friendly market, and you're going to get a great tenant, and you're going to get a property manager. And if you do it right, most homes are going to produce a couple $100 a month positive cash flow. Sounds great. Real estate books are filled with examples like that. Here's the problem. If you figure out how much passive income you want and you divide it by $200, you probably need a lot of houses. And there are definitely better and faster ways to leverage up. No disrespect to single-family investors. There's always a need for single-family homes, and it's a liquid market, and there's multiple exit strategies. But to get to the really juicy returns, most investors are going to make this shift. And as Russ points out, shifting to something that you have interest in personally, shifting to something that's either a lifestyle investment or a cause-related investment, or as Gene Garino says, to do well while doing good. There's reasons to consider that. And so that's kind of the next evolution, is folks go from, I'm a part-time investor and I'm just doing that, on the side, to, now I'm going to be strategic. I'm going to invest in agriculture maybe, or I'm going to pick another product type that I can get my mind around and diversify.
Well, one thing about the role of single-family homes in the evolution of an investor is it's a great place to build some equity. It's a great place to build some track record and credibility, especially if later down the road you want to take on investors. It's a great way to develop a steady stream, a base of cash flow, maybe that you're not going to retire on, but it gives you a fundamental basis of cash flow so that you can go on to the next level and do other things.
We're talking about getting to that next level as a real estate investor. We've got a lot more thoughts. Plus, we'll play real estate trivia next. You're tuned to the Real Estate Guys radio program. I'm your host, Robert Helms.
Live nationwide, you're listening to the Real Estate Guys. Find out more at realestateguysradio.com.
If you've been listening to the Real Estate Guys for a while, then you've heard about the legendary Investor Summit. Simply put, it's the highest level event we do, and the content, faculty, and attendees are amazing. If you're serious about taking your real estate investment to the next level, consider joining us. You'll spend more than a week with like-minded investors, world-class educators, and real-world professionals, and you'll have a blast. It all begins June 11th, 2020 in Fort Lauderdale, Florida. Visit realestateguysradio.com and click the tab that says Summit to learn more and get on the advance notice list. We'll spend 2.5 days on land learning and networking, then jump aboard a luxury cruise ship for more classes, roundtable discussions, great dinner conversations, and a ton of fun. Go to realestateguysradio.com and click Summit and make plans to hang out with the Real Estate Guys and an all-star faculty on the 18th Annual Investor Summit at Sea.
Real Estate Guys listeners, are you tired of losing real estate deals due to financing issues? Have you had enough of waiting on banks, lenders, and investor groups to fund new projects? What if there were a way to eliminate all the hassle and invest in real estate on your own terms? I'm here to tell you there is. Patrick Donahoe here from Paradigm Life. I'm an Investopedia Top 100 Most Influential Financial Advisor, and I recently wrote a best-selling book about the financial strategy that changed my entire investment model, and the one that could change yours. To get a copy of my book for free and learn how you can maximize your real estate portfolio by acting as your own bank, send an email to mybank@realestateguysradio.com. Don't make another real estate deal without reading my book first. Email mybank@realestateguysradio.com now to get your copy for free.
Hello, this is Robert Kiyosaki. I'm the author of Rich Dad, Poor Dad. And if you're serious about learning how to invest in real estate, listen to the Real Estate Guys. They really know what they're talking about.
Welcome back to the Real Estate Guys radio program. Thanks for tuning into the show. If you want to go to an exotic paradise where there are amazing real estate returns, then join me for our Belize discovery trip. We do this a few times a year. We go to the beautiful country of Belize and learn about the law and the real estate and the banking and the privacy and all that stuff. The next trip happens in November. You get all the details at realestateguysradio.com. We're talking today about getting to your next level as a real estate investor, whatever that looks like for you. Before we continue that discussion, it's time to play Real Estate Trivia. We do this every week. We give you a chance to win a prize by knowing our real estate trivia question. In just a minute, you'll hear the question. Your job is to come up with the answer and then send it to us at trivia@realestateguysradio.com. Once you have a good guess, send that to us with your name and your mailing address, because if you're the winner, we're going to send you a great book called Life-Defining Moments from Bold Thought Leaders. It is a compilation book of a whole bunch of stories from some super great folks, some real estate folks, some other folks. That can be yours if you know today's real estate trivia question. Last week it was our clues in the news show, and we probably scared the heck out of you with that, but here was our trivia question. Gold peaked in U.S. dollars near $1,900 per ounce. What month and year did it hit the high? Well, August of 2011 is when the gold bugs were rejoicing. And you know what? They're pretty happy again today. Here's our real estate trivia question for this week. Where was cotton candy invented? Yeah, what real estate market was cotton candy invented in? It was a long time ago, but you couldn't have a fair or a big event in the summer, certainly without cotton candy. Where was cotton candy invented? If you know, or just want to guess, send your best guess to trivia@realestateguysradio.com. Trivia@realestateguysradio.com. Just include your name, the answer to the question, and your mailing address, so that if you're the first with the right answer, you'll get life-defining moments from bold thought leaders. That's today's real estate trivia question. We're talking about your natural evolution as a real estate investor. You can stop, by the way, at any one of these stages. You just want to own property and put a new property in your portfolio every 5 years, you can do that. But if you want to get to the next level, there's reasons to consider that. We've talked about shifting asset classes or product types and moving into more than one type of real estate. Kind of the next level is when you reach that point that your passive portfolio can provide the income you need without working, and you decide, you know what, I'm going to go full-time into real estate. Now, not everybody does this. In fact, most people don't. But it is the next evolution to say, as much as I love my job or not, my real estate is doing it for me. I'm getting good at it. I have great relationships. I'm in strong markets. I know my product type, and I want to do this as my primary vocation.
Yeah, I mean, some people, when they get to a point where their passive income from their real estate portfolio exceeds their full-time income, they literally want to retire. They don't want to work. They don't want to do anything. And that's okay. Good for you. You've earned it. For those of us that would prefer to continue contributing and being productive, and again, I'm not putting down anybody that cares to retire, but I'm just saying Personally, I just like staying busy. You use that as a base to go on and do bigger and better things. And you may be reinvesting your own money. You may be sharing your expertise with other people and partnering with them. You may be taking on private investors. There's a lot of different ways to do it. Or you may decide to invest your time and money in learning a whole new asset niche and developing your expertise there. Because, and this is a caveat I think a lot of people need to be aware of. Just because you've made a lot of money in one product niche doesn't mean that you're automatically an expert in the next niche. You have to approach each level. It's like going through school. You know, when you're in grade school, I think to a second grader, a sixth grader is God, right? I just remember when it was such a big deal because the kids that were in grade 1 to 3 were on one side of the school, and the kids that were 4th through 6th were on the other side. And it was a big jump up. When you got to be 3rd grade, you were king of that side of the school. But then all of a sudden you were in the 4th grade and you were the little guy on the big side of the block. And then you get to be the 6th grader, you're the king. Then you show up in junior high school. And I think everybody understands that evolution, whether you had it in school or sports. Every time you move up a level, you're the rookie. And I think you have to approach being a rookie with a degree of humility and a desire to learn, and you're searching for new role models. So even though you were top of the heap at the last level, when you get to the next level, it's a whole new ball game. And I think if you approach it that way, then you have the opportunity to avoid risking all of the wealth that you've built at the previous level by making a colossal mistake by playing too big for your britches at the next level. I think that's a very, very important concept.
Such a good point. Back to this whole before you quit your job. At some point, it may make sense to go full-time, but many people try it a little bit too early. So think long and hard about it. But there's a lot of reasons, not the least of which is there's a particular tax benefit that comes along with being a full-time real estate professional, which would include investing in your own account. Now, we're not tax professionals, so you want to talk to a great tax pro about that, and or come out to the Secrets of Successful Syndication, and you can meet Tom Wheelwright, CPA, and he will definitely have that conversation with you. But it's another reason why there's a benefit for being full-time, not to mention the fact that you set your own schedule, that you don't have to be in commute time, all those things. But full-time's kind of the next thing, and there's no one way to do that. We have a friend who owns over 100 single-family houses, and he manages them himself. Well, I don't know that I would ever recommend that, but he's built them over time, over a career. He has long-term tenants, and all he ever does with his time is deal with his tenants and deal with the vendors that need to come and make improvements or repairs and collect the rents and the whole thing. He's his own manager. You can also become full-time by allowing other professionals, property managers, asset managers, to manage your portfolio, and you're more strategic then about what you do. So it's beyond the scope of today's show to kind of cover all that, but that's kind of full-time. One of the ways to go full-time, and one that we talk a lot about on this show, is the idea of becoming a real estate syndicator, a person that puts together deals using other people's money. And talk about evolution of real estate. Most big deals across the globe happen through real estate syndication.
Well, no matter what business you're in, if you want to get bigger, you're going to have to put some of the money that you have coming in from whatever you're doing into that growth. And the premise is that you make a smaller percentage of an ever-increasing pie. And as long as there's unlimited customers, as long as there's unlimited ability to grow your business, whatever that looks like, then as long as you're in growth mode, you can continue to take a little bit of a haircut on the percentage as long as the absolute dollars falling to the bottom line makes sense. If you build it right, eventually you build a business that just operates itself, just like you build a portfolio that operates itself. And so Michael Gerber, in his classic book, The E-Myth, talks about what happens to a normal entrepreneur when they go into a business and they're doing everything themselves and they have a hard time letting go. Getting to the next level as a syndicator or any other way you choose to do it in any business, it involves a little bit of letting go. And part of what you're letting go of is a share of the profits. You're saying, hey, I know how to produce profits in real estate. The challenge that I've got is I don't have enough equity. I don't have enough credit. I don't have enough time. I'm going to need to build a team. To build a team, I need to have more volume. To have more volume, I need more equity. Where can I get more equity? I'm going to have to take on investors. To get those investors, I'm going to have to share the pie. I'm going to have to slice it up a little bit. But when you do the math and you look at that whole thing and you're like, okay, I can create enough fees in what I'm doing out of the project itself to pay for the staff who's going to help me do it all. And there's enough meat on the bone that I can pay a big chunk of it to the investors for the use of their capital. And there's enough left over at the end of the day that it's worth my time. And once you get that machine built and it begins to scale, then your number can start to get really, really big, even though as a percentage it may not be that big, but as an absolute amount of money and a return on time and effort, it's huge. And that's why we love syndication.
You know, we talked a little before about economies of scale, and the premise on that is you buy a 200-unit apartment building and you can keep the costs down, you get to buy in bulk, you get to leverage your staff over a number of units, and that becomes a lot more profitable per door than having, say, a portfolio of a couple hundred houses. Because of that, people really love the multifamily space, us included. But the problem with 200 units is that might be a $15 million building or more, depending on where it is. And you might just check your bank account and say, I'm a little bit light. Or I've only ever qualified for $300,000 and $400,000 and $500,000 mortgages, and now I need to get a mortgage for $11 million. I really can't qualify for that. Well, this is when syndication makes the most sense, because you put together everybody's assets, their capital, their ability to qualify, their history, and you bring on strong third-party management and other folks that can help, that are great at it and also full-time, and it takes on a life of its own. Now, it's daunting. People get weird about it. It's like, oh my gosh, I could never do that. And yet it's really just a natural evolution of everything we've talked about. Most of the syndicators we know, and we know a lot of them, they started as single-family home investors. They then decided to go into another asset class like multifamily or retail. And then before you knew it, they were full-time raising money to do deals. And it means that you don't have to stop investing in real estate just because you've ran out of capital or you've run out of the ability to qualify for a mortgage, you don't stop for that reason. You stop for the reason that there's not a great return I can find, or I'm not able to leverage a relationship in a way I have before, or I've got to spend some time developing another niche. And then you can pour it on. When you find a great deal, you don't have to worry about the money. And this is the place we've gotten to, and it's been amazing. I never look at a real estate deal and think, I can't afford that. That never even enters my mind, because I know it's not about me. It's about who I know and who can I put together and who can I call to involve and say, hey, I got a great deal. You want to do this? And before you know it, you're creating money out of thin air. Syndication is one of the most lucrative businesses, not just real estate, businesses on the planet today.
Yeah, it's a great business. And if you go back full circle, when we started out the show today, we talked about at the beginning, and you don't have a lot to work with and you use what you have. One of the most important things you have, as you're mentioning, Robert, is relationships. You build your brand, you build your credibility, you build your network, and now you've got people who are willing to invest. And it isn't about taking, it's about sharing. If you've mastered the art of making money, just like we talked about earlier, if you figured out by accident that you could rent out a house that you used to live in and over time it makes you a profit. A lot of people become syndicators by accident because they figure out how to make money in real estate investing, and their friends and family see them making money in real estate and they're like, hey, can I put some money in your deal? I'd like to make some money in real estate too. And pretty soon, you've got an investor here, an investor there, and it just kind of happens. That happens to a lot of people. The premise of saying, hey, I want to compress timeframes and get to the next level fast is, if you can do it by accident, how much faster, how much bigger, how much better could you go if you actually tried, if you actually had a plan, if you actually set out to do it and studied it instead of just doing it by default? It's that way with bread and butter real estate investing. How much more could you do if instead of learning by accident, you did it by design? As a syndicator, you may already be doing a little bit of on the side because people have figured out that you know how to make money in real estate. What we're saying is if you have that skill set, if you have that reputation, you already have a ton to work with. Just learn how to actually structurally organize the business, be compliant with the laws as far as raising money, make sure you have the right entity structure and the right advisory team so that you are obeying the law and you don't get yourself in trouble legally. You can really go big because here's the thing. There are trillions of dollars out there right now. The stock market is very, very jittery. Yields on bonds are ridiculous. They've been cut in half in the last year. I mean, the 10-year treasury right now is like 1.5, 1.6. It literally, somebody out there can have $1 million in cash, and if they're investing for income, they put that into a U.S. treasury, they're making $16,000 a year. You can be a millionaire on your balance sheet in today's economy and be living below the poverty line in your income. That is a big, big problem. There are a lot of balance sheet millionaires out there that need the power of income producing real estate, but they just don't know how to do it. If you know how to do it and you can bring that solution to those balance sheet millionaires, there's a lot of reasons why I think they take a long, hard look about getting out of the stock market, getting out of Wall Street and getting into Main Street. And the challenge is they just don't know anybody who can help them. And you can. And so we're big proponents of it. We'd love to see thousands and thousands of people get into the syndication business, go raise millions of dollars, make fortunes for themselves and for their investors, because the world needs it right now. And the opportunity's never been better. I mean, every day I wake up like, I can't believe it's actually gotten even better. I mean, I thought it was great 5 years ago. It's better today.
We're talking about getting the next level in your real estate investing career. More when we come back. You're tuned to the Real Estate Guys radio program. I'm your host, Robert Helms.
Need help with your real estate investment portfolio? Check out the resources page at realestateguysradio.com.
If you love real estate and have always wanted to own your own business, listen up. The Real Estate Guys and their panel of experts want to teach you how to go full-time fast in the real estate syndication business. These next few years may go down in history as one of the best times ever to acquire investment real estate. There are deals everywhere if you know where to look and how to assemble the resources. The Secrets of Successful Syndication seminar will show you how to make big money doing big deals from a team of experts that have syndicated projects totaling more than $1 billion. Don't wait for someone to give you a raise. fees, or create a job for you. Attend the Secrets of Successful Syndication and learn how to build a team, raise capital, find deals, and make full-time money in 6 months or less. Go to realestateguysradio.com and click on events. All the big players use syndication as a way to diversify risk, optimize profits, and earn big money. You can too. Go to realestateguysradio.com and click on events.
Memphis is famous for being the home of the king of rock and roll, but it's also the king of cash flow. If you're looking for affordable cash flow properties, it's hard to beat Memphis. Get your portfolio rocking and more cash flowing your way by calling Terry Kerr at Mid-South Home Buyers. Terry's the king of turnkey properties. Contact Terry through the resource section at realestateguysradio.com. And be sure to order Terry's tips for turnkey rental property investing report. It's free. Just send your request to turnkey@realestateguysradio.com. The Real Estate Guys are throwing a party and you're invited. Join us at the New Orleans Investment Conference, November 1st through 4th. Now in its 45th year, it's the nation's longest-running investment conference and features some of the biggest names in economics and investing, including Doug Casey, Dennis Gartman, Rick Rule, and Peter Schiff. The Real Estate Guys are speaking in multiple sessions, attending lots of others, and we're hosting a hospitality suite one of the evenings for our friends and listeners, including some VIPs for you to mingle with. So make plans today to join the Real Estate Guys at the New Orleans Investment Conference. With everything going on in the world, no serious investor can afford to miss it. For all the details, send an email to neworleans@realestateguysradio.com and it will tell you how to get upgraded tickets and join the party. That's New Orleans at realestateguysradio.com. And we'll see you in New Orleans.
Hey, this is Phil Collin from Def Leppard and Delta Deep. You're listening to the Real Estate Guys.
And welcome back to the Real Estate Guys radio program. We're so glad you're here. Tell a friend about the Real Estate Guys. Hey, if you are interested in syndication, probably the easiest and best and most logical next step would be to come out to the Secrets of Successful Syndication. It's a 2-day workshop we do twice a year, and the next time is right around the corner. All the details on our website at realestateguysradio.com. We're talking about your evolution as a real estate investor. No matter where you are, what's the next logical step? And for a lot of folks, it's syndication. Now, Russ, before we talk a little further about how you get into the syndication business, because I know folks are always interested in that, there is the other side of it. For some people, where they go next is they passively invest in syndications. They find great deals where somebody needs that participatory capital. And rather than work harder, they're at a point in their life where they, rather than go buy another building and qualify for another loan and have the liability, how about if I just put a couple $100,000 into a deal where there's a great team? And then I could invest in, this market and that market and this product type and that product type. And in fact, that's part of the training that we do, folks that come out to our syndication event. There's certainly a group of folks, that's what they're after. They want to learn how to vet a deal, how to look out for the right promoter, what are the questions to ask, and those kinds of things. But it is a natural evolution at many levels. And if you're to that point where you're maybe Fannie and Freddie'd out, meaning you already have all the single family loans that you can qualify for. Maybe you're just, fully deployed. You've got all your money working and you're making money and everything's good, but you're not sitting on a pile of cash. Well, there's lots of folks with the opposite problem. And that's what's great about syndication is it's a way, in a market-friendly way, to match up different needs with different abilities.
Well, that's what Wall Street is based on. Wall Street's based on the notion of finding people that have more money than time and having them put their excess money in the hands of quote-unquote professional money managers who then go out and invest the money for a fee and turn a profit for their investor. I think there's probably a billion reasons why Wall Street has lost the trust of a lot of investors, and they do it by default, not because they really want to, but they don't know what the options are. So there's a lot of folks out there that have worked hard. They've maybe built up some equity in a property or in a business. They've sold a business, cashed out, or they've built up a stock portfolio. It's been a pretty good ride these last 10 years. If they survived 2008 and before it, the dot-com thing and some of the stuff that's gone in the past. But now they say, I need predictable income. I need to find a way to take this lump sum of money that I got and turn it into income. And I don't really want to run it. I don't want to have to organize it. So I can turn it over to Wall Street. I can buy bonds. or I can look for someone to put it into a private placement with and diversify in different markets, different product niches, different product types, develop diverse streams of income with a hedge against inflation. Real estate is arguably the best investment to produce inflation-hedged income. In other words, you get income and equity that tends to index up with inflation over time. And of course, if you look at the dollar, it's got 100 and some odd year history of falling. And we've got a lot of active calls right now for the dollar to be devalued. And so if you're looking at that as an investor, you're like, well, what am I going to do? So there's opportunities on both sides. You know, the world has opened up for purveyors of private placements, what we call syndicators, to help people out there who have that pile of money. And so if you're sitting there listening to the show and you're like, wow, I've got a bunch of money. I'm listening to this because I'm trying to figure out how to do it. Don't feel like you have to become an active hands-on real estate investor to participate in the value of investing in real estate. I think that's what Robert is saying. But get into a network where you can meet people that are actually good at doing it, build some relationships, look at some deals, make sure you're doing business with people that you know, like, and trust in terms of their ethics and their competence, and invest in things, product classes, marketplaces that you understand. The great news is, unlike a lot of the stuff that Wall Street offers Main Street investors, real estate is pretty simple to understand. You don't have to be a rocket scientist when someone puts a deal in front of you and says, okay, here's the building, here's the marketplace, here's where we like it, here's the numbers, here's the rents. Pretty much everything you're looking at, you can go, okay, that makes sense, or it doesn't make sense. And you don't need a lot of training to be good. So you do need some, but you don't need a lot. And if you're not going to do the hands-on work and you're going to rely upon the syndicator and his team to do it, you're only giving up a small piece of the profit to let them do it, because they're making their money, as we mentioned earlier, in a small percentage of a big pie. And you can take a slice of that pie and get a good return on your capital. So it works for both sides. And I think Main Street investing in Main Street is just a much, much better, safer place to be compared to Main Street investing in Wall Street, which, you know, you could say is going well. But just because you have made money on your balance sheet, when everybody rushes to the exit, which is what happens when markets get bubbly like they are right now, if you're late to getting out, then you end up holding the bag, and you can see your net worth decline substantially very quickly. Real estate is far more stable, especially when you're investing on the income side of things.
Well, and syndication can be nimble too. We talked about the different product types and the different niches and different, physical geographic markets, and all those things are accessible to you only at a bigger level when it comes to real estate syndication. So if you think that might be something you're interested in, check out the event, the Secrets of Successful Syndication. But syndication isn't the only full-time way. A lot of people decide, because syndication is just the art and science of raising the money and structuring the deal. Syndication is not doing the actual work. It's not property management. It's not development. But those are things you might consider full-time. Some people get really good at, say, rehabbing houses, and they decide, well, you know what? I could build houses new. And before you know it, they find a little piece of land and they develop a little neighborhood of 6 or 8 houses, and they go, wow, this is great. And so there's other full-time ways to get into real estate, like property management, private lending, real estate development, and all those, of course, we don't have time to talk about today, but that's the idea, is that you, wherever you are, you're starting with what you have, and you have to look at, where's the next hill? What can I go to next? And if you can't see it, you're not going to get there. So it's hopefully today you get kind of a vision of what's next for you and where you could go, and you can start exploring those things. It's never too early to start thinking about the next level in your real estate investing. Hey, speaking of next level, next week we've got a great show for you. Until then, go out and make some equity happen.
This episode of the Real Estate Guys radio show is brought to you by Paradigm Life. Powerful cash management strategies using life insurance. Learn more at beyourbank.com. Mid-South Home Buyers. Low-cost, turnkey cash flow properties in Memphis, Tennessee. Corporate Direct. Asset protection strategies for real estate investors from attorney and Rich Dad advisor Garrett Sutton. Find these and other great companies under the Resources tab at realestateguysradio.com. To learn how you can expose your product or service to the Real Estate Guys audience, call 888-489-7723 extension 4. That's 888-489-7723 extension 4. Or use the feedback page at realestateguysradio.com. Thanks for listening, and we'll see you next week right here on the Real Estate Guys radio show.